Cup of Joe.
What's up, Gainez Nation? It is me, Joseph Gainez, and this is another episode of Cup of Joe. It's been a while, and maybe you guys have been listening to pre-recorded podcasts, but that's only because my girlfriend and I recently had a baby. Welcome to the world, little Gainez. So in today's podcast, it's a very, very important one. Are we in the bear market? Are we going to go lower? Or are we going to go higher? This is a special podcast, so I'm going to include some screenshots just for you visual listeners and viewers on YouTube. Of course, we're still live on Audius, Spotify, and all the other platforms that you can get all the knowledgeable information provided by Team Gainez. All right, let's get to it. So, Bitcoin. We recently saw highs of 69,000 just to be brought back down to current levels of 59,000, struggling to get back up to 60,000, sometimes holding above 60,000. What is going on? What is up with the markets? Are we headed down to 50,000 and lower for the bear market? Let's get into it. So, the way I see it is that from a TA perspective, and you can see this on your monitors right now, Bitcoin has had a hard crash due to multiple reasons. But first, let's get into the technical analysis. Right now, we have a descending broadening wedge, which ultimately is a bullish pattern. But there is also 20 to 30% chance that it can break to the downside. So what are the key levels we have to watch? At the moment, 60,000 holds as our bullish breakout scenario, around 60,300, and our bearish breakdown scenario is at around 55,000. But in the immediate short term, and the more important major key level, is at 58,500. So, to summarize for you guys, the price can bounce between 58,500 and around 61,000 throughout the next couple days, and we'll be fine. We will be bullish. However, if the price goes below 58,500, we can expect a move down to our support of 55,000. And unfortunately, ladies and gentlemen, this support isn't the strongest. In fact, there is a good chance that this support can break and send us all the way down to 52,200. I repeat, 52,200. Now, does that still mean we're in a bull market if we go down to those levels? Absolutely. Listen, guys, based on my fractal analysis from charts dating back in September, we experienced the exact same pattern, and we're looking at challenging all-time highs around November 30 or the first 3 to 5 days of December. And shortly after that, we will make a strong run up to 73,000. Now, you might be wondering, Plan B said we're going to hit 98,000, 96,000 by the end of November. Is this still possible? Well, from a conservative perspective, there are really no charts that suggest it is. But this is crypto, ladies and gentlemen. We are in quarter 4 and possibly one of the strongest legs of the bull market. So I don't want to say it's impossible, but it's definitely not probable. And this is just my personal opinion. You can believe what you want to believe, but based on my charts, we're not going to go to 98,000 in November. All right? Ladies and gentlemen, the highest we will go in November, from my personal opinion, conservatively, is challenging 69,000 again, or a bullish target of 74,000. So that's it. The highest we'll go in November is between 69,000 to 74,000. And guess what? In December, where will we go? Probably over 80, closer to 90,000. And I'm actually leaning more towards an extended bull market into quarter 1. More on that in a different episode. So, again, from a technical analysis perspective, we have these targets, support at 58,500, resistance at around 60 to 61,000. And if either of those break, then we can look for an upside. So, let's talk about the bullish target. What do we need to break? Does that mean if we go above 60 to 61,000, we'll make a straight run to all-time highs? Of course not. We actually have a consolidation area where we need to beat 62,500 and consolidate between there and 64,000 to build stronger resistance before our next leg up to 66,000. Now, these are a lot of numbers that you have to remember. Actually, you don't really have to remember. Look at the image on the screen and just think. If it falls below 58,000, you might want to set some stop losses and buy orders. If it goes above 60 to 61,000, you might want to set some buy orders or stop losses if you're in short positions. I do not advise on leverage. In fact, I'm not a financial advisor, so I do not advise on any buying or selling of assets. This is just a YouTube video. You decide where to spend your money. Now let's look into the fundamentals. So a couple days ago, I posted a tweet on the reasons why Bitcoin could have crashed. If you're also part of my free fundamentals channel, there's a reason there on why it crashed as well. So, a lot of things have happened. The start of, or the proposal for a spot Bitcoin ETF declined. So if you remember, the futures ETF was approved, and that allowed us a rally to the top. And now that a spot ETF was declined, I guess it continued to rally to the bottom. But the time frames are kind of off here, right? Is that one of the main factors? Probably not. Now let me go into the actual speculative reasons on why the price dumped. So in the USA, an infrastructure bill was passed and signed by President Biden. And what does this mean for crypto? What does this mean for the industry? Well, just more regulation and more monitoring of large transactions. If you're not a broker, if you're not a whale, then you have less to worry about. The IRS have already confirmed that non-brokers with large amount will have, I don't want to say more leeway, but less eyes on them. So that's what happened in the USA. Negative reaction by the markets, and probably affected an initial dump, continued by an update from China. So China has reminded its citizens that crypto is banned in the country, and furthermore, crypto mining is banned as well. So a lot of their users are probably using VPNs and still have those machines. They just wanted to remind the citizens of the People's Republic of China that it is banned. And of course, the market is learning. Every time China posts something, every time they ban some Bitcoin or crypto, every time they announce something, the market reacts negatively. So, before anything even happens, regardless of the news being relevant or not to the rest of the world, they sell. Lastly, data suggests that leverage is at all-time highs. So, over the last couple weeks, we've seen more and more traders go on to leverage, and it's probably one of the reasons why the market is shaky right now. There's way more volatility as people get in and out of trades. People are overexposing themselves to the market, and to be frank, they're probably struggling to keep up, through this volatility. And this is something called a leverage flush out. Oftentimes, when the whole market is over leveraged, we'll see quick moves of volatility, whether down or up. If it's bearish on leverage, there's something called a short squeeze. And if it's bullish, then the market pulls you down to what we're seeing right now. All right, what's the last thing? There's the Mt. Gox issue, right? So with Mt. Gox, they're going to be releasing, I believe, 28,000 Bitcoin or $28 million worth of Bitcoin, something like this. I can't really remember, but the assumption is, users forgot their passwords, they lost access to their account, and now with certain KYC, they'll be able to access these specific crypto or these Bitcoins, and the assumption is that they will sell because they haven't had access to their crypto assets in a long time. So this is an assumption. This is speculative. I believe that, it's not going to be the case. I mean, if you get access to your Bitcoin and you knew that it's going to go over 100,000 in the next couple of weeks, and the price just crashed from 69,000 all the way down to 59,000, would you sell it? I wouldn't, right? Now, one thing I wanted to share with you guys, and um, it's not that I wanted to promote any of these services, but aside from Team Gains, aside from our free channel and our paid group, there are a lot of resources online that you, as a regular investor, regular buyer, can look into. There's token metrics, which is one of the more popular ones. If you want to learn TA, you should just go on YouTube and probably download TradingView and do your best with the charts that they provide and the tools that they provide. I myself, I'm an avid user of token metrics. And to add to that, there are actual on-chain data analysis platforms. Some of the more popular ones, there's CryptoQuant, which a lot of the YouTubers use. What else? There's Sentiment. So a lot of these are paid, by the way. They're not paying me. I wish they were. But Sentiment is it says here that it's a comprehensive market intelligence platform for cryptocurrencies, right? So they have lots of charts, lots of data, such as exchange inflows and outflows, which measures the capitalization or the amount of assets held by different exchanges and traders withdrawing and depositing in and out of an exchange. They have supply distributions. With CryptoQuant, it's interesting because this data analysis platform, they would allow sharing, extrapolation, and integration with their data via their API. So if you want to export it into a spreadsheet, into Excel, you want to do different types of analysis, this is something that they offer. And some of the generic data that fundamental analysts and technical analysts would love to see. Popularly, they have, again, the exchange inflow and outflow. They have the network value to Metcalfe ratio, which is a very, very interesting metric. And by definition, it is a valuation metric for BTC network using daily active addresses and Metcalfe's law used to compare how overvalued and undervalued a digital asset is compared to its peers. So just think about that. If you have an idea of whether or not an asset is overvalued or undervalued, it will definitely give you a good perspective of whether or not to invest long-term or short-term. Other ones are Messari. What else? Glassnode, very, very popular one. Don't want to go into too much detail. There's Dune Analytics. But there was one analysis platform from Singapore, and it was recommended or shared to me by some of my clients and compatriots, from Singapore. And I reached out to them to see more about their platform, more about their website. And Matty Moon from BAM, Been a Minute, our other segment, he did a quick first impression and he really liked it. There was a lot of data, it was a little overwhelming, but it allows you to use drag and drop tools that allow you to customize interpretations of different types of data. So Footprint Analytics, definitely very interesting one. Definitely one of the cheaper ones. They've only been out, I think, 2 to 3 months. But they give you a lot of useful data, which in turn, if you're into on-chain data and metrics, would allow you to predict or expect whether the market's topping out or whether it's bottoming out. So it's an all-in-one platform to visualize blockchain data, and you don't even need SQL skills. So this is query language for those who aren't too techy. No need for that basic programming language knowledge. So why would people even track data? Like I said, it helps you predict the future of the market. It allows you to get data-backed perspective, right? And it gives you, I would say, solutions to the questions that you have in terms of each asset, each exchange. I know they have data that you can group between exchanges, data that you can group between segments of the industry, such as DeFi, such as NFTs. You can look into which assets have the most total value locked and things of this nature. So, I'll leave the website link below It's a very, very interesting one. You know what? Let me go through their website right now and just go through their about information. So Footprint Analytics is a DeFi and NFT analytics platform with much more. But of course, they focus on blockchain data, yada yada yada, data-driven charts, community-powered, DAO-inspired, no coding or technical requirements, fork charts with one click, supports cross-chain data, advanced wallet labeling, portfolio, and analysis. All you have to do is submit your data, review, rewards, conduct. What's going on here? There's so much. Like, look at this. Again, I'll be sending screenshots. Hopefully you guys are seeing this properly. David, our producer, much thank you. Sorry guys, I am not streaming or recording my screen right now. We're going to go through that in the future in production when we have more time, when we get our studio, which will probably be set up sometime next year. But look, something interesting about Footprint Analytics is that they have pretty big partners. They have Curve Finance, they have InstaApp, they have B Protocol, they have Definer, DFX, and Badger. So for you traders, for you degens out there, you're probably most familiar with Curve, which is a DeFi play, and of course there's Badger. Alright guys, so again, this is an easy to use analytics platform. They're not paying me to promote. I just felt that this is one of the more interesting analysis platform that is outside of the norm. So again, a lot of people use Messari, Sentiment, CryptoQuant. I'm starting to take a liking into this. Footprint.network, Footprint Analytics. Maybe you would too. Now going back to Bitcoin. I know this is becoming one of our longer recordings, longer podcasts, longer video, but it's very, very important. I believe that we can get wicks below 58,000. Wicks to 55, maybe even a strong wick to 53 on the 4-hour charts. But as long as we have daily closes above 58, we will have a bullish run within the next 10 days. So it's November 18 at the time of recording, at the date of recording. By November 28, maybe even earlier, maybe even as early as November 22, we will start seeing reversals. We will start seeing bounces and runs up. And in the first week or week and a half of December, we will have a new all-time high for Bitcoin. Again, if you haven't, we really appreciate the like. We really appreciate the subscribe. Support our channel. And hey, Gainez Nation, let's stay bullish. Let's stay positive. You can follow me on Twitter at Crypto with Joe. Send me a message on Telegram, also at Crypto with Joe. And again, this is Cup of Joe.
Cup of Joe.